All right. So we talked about, I think it was point and figure in the last video, right? So the idea here is to continue, and this is where it gets a little bit more put together in terms of, okay, here's the bar chart, here's this chart, point and figure chart, and combining the two. So this study is following two study. I have to break down because they're a little complicated. Uh, and as you can see from the chart, this is, I think it was a copper stock back then. And what we're going to be doing is do the PNF and do the bar together. So why this is important is, what the hell did I do? I don't know how to turn it. Goes down. Anyway, I'll figure out how to fix it. But what's the point? The point is you have a, a PNF and you have a bar chart, and you have to be able to combine the two. And what he does is also he takes a stock relative to the index. So, I mean, for us, I don't think we'll be doing all of that unless you're a stock trader. But they definitely need to combine PNF with the bar and the wave chart. Okay, so I'll just do a maybe 2-3 pages and then stop and continue the rest later. All right, as we have seen from the preceding studies, the four phases are what? Accumulation, markup, distribution, markdown. Go sideways, accumulate, buy low, mark it up to make a profit, and sell high, distribute, take short positions, distribute, mark down, and do what? Exit your short positions. So this is just buy low, sell high. All this is saying literally is buy low, sell high. It's nothing more than that. It is breaking it down into common sense and calling it accumulation, markup, distribution, markdown. That's why you know this thing is legit, because it's just buy low, sell high. All right, now when stocks are in phase 1 or 2, he's creating these phases of accumulation, markup. It is said to be in a bullish position. And when they're in distribution, markdown, they're bearish. Obviously, they're bearish. Or its behavior may be no interest. All right, that is, no campaign is underway or in preparation, which means you do not enter, don't even think about it. Why? Because it's not in execution, and it's just floating left and right, doing nothing. Our objective is to determine the technical position of all our markets in our list, which of the above three positions they may be in, and just what degree. For this purpose, we have to deal with three basic factors: price, volume, and that's it. Price and volume. So at this point, we're going to be creating a position sheet. So for you, whoever's listening out there, you may, I don't know, trade Forex, you'll have Forex. You trade futures, you'll have futures. You trade stocks in a position sheet. Or crypto, make a list of crypto markets. But the idea is to be able to judge those markets and say, oh, that right there is in distribution. This other market is in accumulation. This third market is in markup, and that fourth market is in markdown. And this fifth market, I have no clue. Leave it be. All right, that's the idea. But in order to be able to judge that, you need to have a position sheet. Okay. Under the heading of price movement, we have influences. What, I don't know what that means, but basically relative strength and weakness, support and resistance, and the trend, meaning the strength of trend, the rate of acceleration, which is just fancy term for what? Momentum. This is trend and momentum. The angle of advance and decline, as you may know, a trend line is not just measuring trend, it is also measuring momentum by its slope. A trend line measure is telling you it's an uptrend, a downtrend, but the slope and the steepness of the slope is a measurement of momentum. Trend line is the original indicator. All right. So that's really important. So what we are looking at price and volume for markets in the position sheet. What elements of price, when we say we look at price and volume, what is it, price volume? Price specifically, we're going to be taking a look at relative strength, support, resistance, trend, and momentum. That is under the heading of price. When we say price and volume, what do you mean by price? I mean its relative strength, support, resistance, trend, and momentum. Okay? That's it. All right. So what does that mean? For relative strength, you can compare it with, another index. But honestly, like this day and age, you should be able to do a simple relative strength indicator, right? All you do is take price divided by an index over the period of, I'd say about at least 40, 50 bars. So 20 is very low. So, at least they say 50 period. So it'd be like well, the price of the stock divided by the SPY for a period of 50 days at least, right? Below that, it would be giving weird information, and a lot of times it would just be your technical bounce. So that would take care of the first thing. Support and resistance. I mean, I don't know. Just look at the pivot point at the bottom and the top, right? It's not as simple as, okay, I'm just looking at the low and drawing a line, but we can do that for now. It's just the lines of support and resistance. That actually would be correct, like drawing the line at the support and resistance levels, knowing its relative strength, and for trend and momentum, I mean, you could just use a trend line, but other folks will probably use an indicator, or they may use some moving average combination, right? If you want, you can use both. On the chart, you'd use a trend line, and maybe like in a scan or a quote list. What is it? Quote page? I forgot what watch list. You could have an indicator or something that gives you trend and momentum readings. There's many ways to do this, but however you feel comfortable, just do that. And why I say that is because a lot of folks are fairly sophisticated. Um, oh, there's a D. Shakeouts, terminal thrust, oversold, overbought conditions. This is just so important. By the way, when we say shakeouts, I'm going to throw in springs and upthrusts in there. All right. I think under the heading of price, we'll be looking at relative strength, support, resistance, trend, momentum, and springs, upthrust, as well as overbought and oversold conditions. There's many ways to measure overbought, oversold. If you want to use an indicator, so be it. All right. If you can just eye it though, like what is overbought and oversold? Literally, if a market moves up without pulling back, meaning it is rally, pull back, rally, pull back, rally, pull back, rally, 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 rally without a pullback, it's in an overbought position. That that's like a subjective judgment, but you could also, if you draw through a trend channel, if it tags the top of the channel, meaning it's like really going up, when it goes to the top of the channel and tags the upper channel line, you use that as overbought, and the bottom of the channel can be oversold. All right, so or you can use an indicator. Or what else is there? I think that's about it. So again, price and volume studies of the distribution of the, what is it, of the watch list, right, or the position sheet, and these are the elements that we'll be observing. So now you know what to look for. This is very important, that you're not going to see on the internet, that no one talks about, because they're not using position sheets. All they're doing is B, support and resistance. And to some degree, like some Wyckoffs will have that relative strength, right? But basically it's relative strength, support, resistance, trend lines, and springs, upthrusts, and going into overbought and oversold positions. Thus, from our analysis of price, we are able to gain much valuable information concerning the present technical position and probable trend of each stock, or each futures market, or each crypto market, or each forex market. These four things are what we will be tracking in each market that we will be tracking. Got it? Now, volume or intensity of trading, that's the second thing. One is price, and we went over the price factors. Now take a look at volume. It is a confirming, modifying, or conflicting / contradictory influence to price. All right. So what are the things that you look for when it comes to volume? One, identifying climaxes. What the hell? All right, yeah. Well, climaxes. Then the quality of supply and demand around points of support and resistance. All right. The quality of supply and demand around previous points of support and resistance. So, I mean, that'll tell you a lot of things, especially if it's low volume, when it goes to a price support or resistance level, right? Chances are it's not going to break through, right? Because it could be a test, for example. Then shakeouts. Shakeouts, again, I explained that I'm going to include springs and upthrusts. Because to be frank, that's what a spring upthrust does. It shakes you out of the position. Right? It hits the support level, penetrates below it, then you're out. Stop run, done. It's just literally the spring upthrust is a shakeout, and it is but it's not like those big shakeouts. Typically, it's it's an ABC pattern. Identifying accumulation and distribution, or nothing at all, right? Just drifting and should just be left alone. And determining whether the trading range represents absorption, all right, or whether it is reaccumulation or redistribution. Reaccumulation or redistribution. And L, judging the character of the action when the stock reaches the indicated minor or major objectives, up or down. From the interrelationship of price and volume, we are able to judge when a move is beginning and when it is ending, and when it's time to act. All right, I'm going to stop right here because this is a very critical piece of the Wyckoff method, because he's telling you what to look for, and then we're going to start looking for it. All right, that's all. Thanks. Bye.